Good day, viewers. Firstly, Happy New Year. I'm delighted to be back and to be reconnecting with all of you as we at Catalyst are very excited about 2024 and specifically what the market has in store for global listed property. I'm Binette van Wyk, Chief Operating Officer at Catalyst Fund Managers, and this morning I'm joined by Lance Besaidnout, a Senior Investment Analyst of our Catalyst Global Real Estate UCITS Fund. Lance, it's good to see you after the festive season. I hope you had a lovely and well-deserved break.
Likewise, Binette.
Lance, I believe in our Q4 dashboard. You've written a very compelling analogy between global REITs and then the history of the Springboks World Cup successes since 1995. Now, 1995 does take us all back, takes me back to Sabay, but I think for most South Africans, actually all South Africans, it was such an impactful moment when we won that Rugby World Cup. And then obviously it's quite fitting given the Springboks' recent success in 2023. I'm sure that our viewers, including myself, are very keen to learn a lot more about this analogy.
Yeah, sure, Binette. So, going into it, two of my passions in life are rugby and investing. And I thought, it's no secret that the last few years for the global community and for South Africans alike has been a challenging environment for many different reasons. So I thought, why not let's start the year off on a fresh footing, strip away the financial jargon, make it relatable and exciting to read. So I thought, why not start the year off with some piece that's a bit exciting, that's something atypical, delivering a message that incorporates the key insights into the asset class without throwing financial jargon at our audience, because that might be most welcomed and easily digested by our audience. So also, I thought an appropriate vehicle to do it by would be to also celebrate the recent and long-term success of the Springboks. So that's sort of where I got the inspiration from for the piece. And yeah, I think hopefully it will make for some good reading. In terms of the long-term track record of the Springboks since the 1995 World Cup, it's really a success story that's really close to South Africans' hearts. And I saw quite a few similarities between that and the REIT asset class. Often, when the Springboks come up against a strong opposition, like the old foe, being the New Zealand All Blacks, they're typically the underdog. However, if you look at when it really matters in World Cup cycles, they've clinched the most cups so far and have always been strong contenders. So I think we feel that probably REITs are also sometimes underestimated, and that's evidenced by their long-term track record in terms of being out of the major asset classes over a 25-year period, a similar time horizon to from the 1995 World Cup. They've also outperformed all opposition. So that was the motivation for the piece.
Lance, I'm unbiasedly very happy that you've compared global REITs to the box. Now, if you've made that comparison, I'm very excited to know what you've compared global equities and global bonds to.
So firstly, from the outset, I don't want to offend anyone, but in terms of comparing global REITs to the Springboks, because of that steady returns, quite predictable outcomes, and they've delivered over the long term, if I had to compare them to REITs, I'd probably liken the All Blacks to global equities. So, garners a lot of attention, quite flamboyant, a lot of flair, dynamic playing style, very attractive in terms of watching it and the stories behind it. The one thing is that, that they've been very dominant across their history, but particularly so outside of World Cups. The Springboks have still outperformed them on a World Cup track record. And that is probably characteristic if you're thinking about equities in terms of higher reward, but also greater variability in returns. On the other hand, and pardon me for the analogy, but the Australians or the Wallabies, I would liken more to fixed income or global bonds. And the reason I do that is that if you were to play South Africa or the All Blacks at their best, it's very difficult for the Wallabies to beat them at their best. But when those sides are out of tune or not playing at their best, there have been some times where Australia has capitalized and they've managed to achieve a win over those teams. And typically that's when they're not playing at their best. And what I liken that to in the write-up is a risk-off environment where your higher risk asset classes tend to underperform your low-risk asset classes like global bonds. But if you had to take a step back and say, looking forward, how do you think the teams would perform? You'd probably say the All Blacks and the South Africans would consistently outperform the Wallabies over the long term, and so too for the asset classes. So that's the sort of how I framed them. The REITs probably moderate risk balance with moderate return, equities high risk, higher variability, and Australia or the Wallabies being bonds, lower risk but more predictable outcomes.
Lance, you've played rugby your entire life, right? So you'll know that no matter how well prepared a team is for any big game, the team can't predict and prepare for every key moment of that game. I mean, the rugby ball might bounce in the underdog team's favor, right? Or we all know referees make interesting calls, and sometimes it's at the expense of the team that we're favoring. Now, there are all these non-controllables in any rugby game. How do you think about these non-controllables when we take a look at the global macro environment?
So how I think about it and parallel it to the rugby environment is that I would parallel that to the sudden global macroeconomic shifts. So the past few years has been, I suppose, characterized by a period of heightened inflation, a lot of uncertainty, heightened global debt levels, and now an increasing interest rates. And obviously that has a concomitant impact in terms of asset values and things like that. So I would liken it to those unpredictable shifts that you can't predict. And the best that a team can do is to control what they can control to the best of their abilities. And I suppose the question that we get quite a bit from investors is, relative to its long-term history, how has the REIT sector performed? And the short answer is not well relative to long-term history. The silver lining, and this is what I'm alluding to, is that a lot of that performance is down to the non-controllables. So if we look at the write-up, and the audience is welcome to have a look at the write-up and read through it, and what I address in the write-up is that actually the lion's share of the REIT sell-off that really began in the beginning of 2021 is down to an increase in real yields. Apart from broader perception that real estate is a levered asset class, and as interest rates go up, interest costs will go up, it will affect profitability and share values. Yes, there is an extent of truth to that, but the reality is that much of our universe, pretty well fortified balance sheets, loan to values around 30%, weighted average debt terms exceeding 7 years, and the vast majority of debt being fixed. So the point I'm making is that they're pretty well fortified and capitalized to insulate themselves from the movement in interest rates, and probably the impact on interest rates on these companies is less than so perceived by the market.
Lance, we know in South Africa we're sitting with this abundant pool of rugby talent, which makes Jacques Nienaber and Rassie Erasmus' job quite easy to select from this bunch of world-class players, right? But despite the fact that these individuals are exceptional in their own right, the key actually lies in finding and making those correct decisions to find that optimal mix of players where you've got the highest probability of a long-term success. I believe the same is true when you and the team are looking to construct a global listed property portfolio.
Yes, exactly true. And like you say, funny enough, having such a vast talent pool makes your job easy. It's a bit of a double-edged sword because it can also make your selection quite difficult because you're spoiled for choice, which is really what is happening in the global sector. There's about 20 subsectors that comprise the real estate sector from which you can choose. And just like in rugby, you would want diversification and exposure to different aspects or different factors. But the truth is you can't have a team that's all Frans Malhabers, and you can't have a scrum that's all Faf de Klerks. So you have to have a balanced approach. And I think what really is attractive globally in listed real estate is just the breadth of opportunities. So there's close to 20 subsectors, so investors are spoiled for choice. And if you have adept specialist fund managers, they can select the right opportunities to construct a portfolio with the aim of generating better long-term risk-adjusted returns. By contrast, if you follow a passive strategy, you're going to miss a lot of these opportunities, and you're going to be misaligned in terms of to opportunities that might cost you in terms of a return. So, for example, I mean, that's evidenced by, over the past decade, the cannibalization of traditional sectors by some of these niche sectors. Whereas if you followed a passive strategy, you would have been exposed to that demise and probably not as exposed to the beneficial uptick in some of those other performers as they gain greater part of the benchmark. So, for example, in our portfolio, we might hold a sector like towers with really strong, favorable demand drivers, where that's not even in the benchmark. And effectively, by contrast, we are much less exposed to a traditional sector like offices, which constitute 10% in the benchmark and used to constitute a lot more. So I think it's very crucial to be able to have someone that can make those decisions to really construct a portfolio that will deliver good returns at acceptable risk.
All this talk about rugby and the Boks and the All Blacks and the Wallabies is getting my blood pumping for the rest of this year. Just in closing, what are your last thoughts that you would like to leave with our viewers today?
So, I think the piece would be great to read for our viewers as it gives a lot more context. But in terms of the parallel between the Springboks, Wallabies, All Blacks, and various asset classes, I think the key takeaway is that diversification and strategy is essential, where you have a mix of different asset classes to prepare yourself for uncertainty and changing economic non-controllables in the future. And I think in terms of the REIT sector specifically, in terms of the long-term track record, I think what's been proven, if you have a solid foundation, particularly when fundamentals are healthy, which they currently are, it really, by sticking to what you know, ensures a greater likelihood of long-term risk-return profiles that are attractive. So it betters your opportunity to do that. And I think that aligns well with a moderate risk and return profile, which is the case with global listed real estate.
Lance, thank you so much for your time and for sharing your valuable insights with our viewers today. Viewers, thank you for tuning in. If you'd like to learn more about the analogy between global REITs and our box, please refer to the full Q4 2023 global dashboard. Alternatively, please reach out to me as per the contact details below. Thank you and goodbye.